In my last video, I walked you through a setup which was known as the first down day after taking out a weekly high and rising for 3 days. Now, I want to provide you with another example of that to prove to you that these are recurring patterns and they occur on any market. Okay, so in this example, I am using the Canadian dollar, okay, symbol top left, it's the USD CAD, which is the Canadian dollar. Now, I want you to look at these two areas on the chart. Firstly, let me quickly just remind you this blue vertical line on the chart represents the start of a new week, okay? You can see another one over here on the left, so we're going to be walking through this week's trading and last week's trading. So that means this week here, all of this is the current week and last week's trading, okay? Which is exactly what I explained in my last video using the pound Aussie pair, okay? So first thing, let me put up the day marker so you can easily know what day it is. Let's see how we can do that. So I'll mark out Monday because that'll give you a reference point and you'll be able to follow along for the different days we're going to talk about. So that there is Monday, okay? So you know if that's Monday, then the day before is Friday, and the next day is Tuesday. That's how you're going to use that marker, okay? So Monday is very important. We trade below the low of the week, even very slightly, right? Just by a couple of ticks, right? So Monday takes out the low of the week, and that's when I get interested in the market, okay? And as I said before, if the market has taken out a low of the week and it's come back inside the range, I look for a push back into that low of the week for a move up. But I want to see something on the left-hand side that provides a reason for why the market needs to go up. You can see, just in the last example, we have these equal highs, okay? And that's going to draw the market to move higher to take out people that have their stops up above that level. I've explained this in detail in the last video where I spoke about the pound Aussie trade. So go back and look at that particular video for a more in-depth explanation of what's going on here, okay? So the market, once it takes out those highs, then there's further liquidity up higher, okay? And that is in the high of that previous week, which is right there, okay? You can see that Monday we go up, Tuesday we have a pullback, okay? And Tuesday continues to go up, right? And then Wednesday we continue to go up as well. So we have 3 days where the market has continued to rise. Now what happens on that third day? Well, on the third day, if you look at what's going on, once we take out that weekly high, okay, so let me draw a line there. Let me draw a line on the weekly low that was taken out on the Monday. Again, this is exactly the setup I explained to you in my last video in which we were talking about the pound Aussie. So here we've taken out a weekly low only by a few ticks. And if you are an expert in reading the markets, the weekly low is actually over here. Now, a lot of you will not understand why I'm drawing a weekly low there, and that's okay, but that is essentially the weekly low. The rest of that down move is actually a stop hunt, okay? But anyway, here, very clear, just to make it non-subjective, Monday has taken out the low of that week, which was on Friday, even by a small little tick, okay? And then let's draw a line at the high of that previous week, which we can see has been taken out on Tuesday in the new week, okay? So weekly low has been taken out, right down here, on the start of the week on Monday, and on Tuesday, we continue to go up, okay? And on Wednesday, we continue to go up, and then we essentially reverse, okay? We've reversed, we're back inside that weekly range. So it's basically a false break reversal of that weekly high. I've spoken about that in the last video. It's a false break, and you're back inside the range, okay? You're up here, and then you get this continuous move down, okay? So it's not only a false break of the high of the previous week, which is there, denoted by this line here, but on Wednesday, we make a new weekly high, and the market takes that out on the same day, okay? And reverses back inside the range, which you can clearly see. If I mark out the high of the current week, you can now clearly see that we've gone above there, we've come back down, and just as I said, we need to push back up into that high of the week, and it needs to be at the right time, the right session. So that yellow box is New York. But that's not really the setup that I want to teach you. I want to continue my discussion on the first down day setup, okay? So on Wednesday, remember this is Wednesday, okay, because this is Tuesday and this is Monday. So on Wednesday, what can we see? We can see that the market, after rising for 3 days, okay, Wednesday being the third day, on that same day, the market closes lower than it's open. That square above is the open of that day on Wednesday, and we close somewhere around about there, right? So we close down. That's the first down day after having 3 days of rise and taking out current week of high and previous week high, okay? So all those things are important. All those things are part of this setup. So after the day that you have that first day, down day, let me actually write that in so we can have a reference to that. So this is the first down day, okay? And let me write that in. So that's first down day. Now what you want to do the next day, which in this case is going to be the Thursday, okay? So this is now the Thursday. You're looking for a sell high opportunity, and I like to find that in New York. This is the New York session. So any pump up, prior to the open of New York, at that time, I've mentioned before, 9 or 9:30 or 10 a.m., then you want to look for an engulfment, and that is the confirmation of that move down. I can see, and I'll zoom in a moment, I can see that engulfment happened at around 10 a.m., okay, 10 a.m. So let me zoom into that day, which is the 2nd of May, so that I can show you what that entry looks like in that New York session. So there it is there, okay, there's that small pump up, we can see, okay, 45 minutes to an hour, you need to go and look at this on your own chart so you can really identify this. And you can see that engulfment inside that New York session. That yellow box on my chart is the New York session. That engulfment, that high there, is right at 10 a.m. and then engulfment the next 15-minute candle. Just make that a little bit bigger so you can see what an engulfment means. So you can see that this move up, okay, is that pump up. And then this here is 10 a.m. candle, and that then is the next candle, 10:15. We have a full engulfment. And now let me talk about the targets for this particular setup. So just as I spoke about in my last video, you're going to be targeting the low of the week, but you want to make sure that there is at least more than 75 pips in that move down, because the way that I like to take advantage of these opportunities is that I want to get at least 50 pips, okay? So the low of the week is down here. You can see that there's close to 100 pips in potential move down, so I can easily grab 50 pips on that move down, okay? And that's it. That's the setup on its own. You can see we went down. I mean, the first area of interest would be the low here. Right, this is that initial pump. Now, I haven't mentioned that in this recording, but you want to see that there needs to be a reason for the market to go down from this entry over here after the first down day. You must have a pump on the left-hand side. I've mentioned this in the last recording, so go and look at that video. So here's that pump. Okay, you've got to have this on the left-hand side. There needs to be a reason for the market to move. Okay, just like I mentioned on a break of a weekly low. So, for example, this Monday we've broken this low. There needs to be a reason to move up, and that's these equal highs up here. Okay, where the market needs to move up through. Okay, so watch that video as well. Now, on this move, after having this first down day, there needs to be a reason for the market to move down, and that is this area here where there's been a pump up on the Tuesday. But ultimately, our target is the low of the week, starting from that Monday, and you can see on the Friday, we have taken out that low. Okay, so I hope that this video has been useful. You need to watch the video prior to this to learn the more intricate details of this setup. Okay, essentially, you're looking for a low of the week taken. Okay, you then need to have, I'm going to scrunch this chart up a little bit so that I can show you all the different things. Okay, so in summary, you want the low of the week taken, right? There needs to be a reason for the market to then, after it's a false breakout when you move back inside that range, right? And you're expecting the market to go up, you need a reason for the market to go up. We have two reasons. One, these relative equal highs over here and the previous weekly high over here, both of which have been taken in this new week in this pump up move. That movement needs to be across 3 days. So Monday's day 1, Tuesday's day 2, and the third day is that Wednesday, upon which we then get a reversal, which is another false break reversal at the high of that week, and a push back in to the high of the week in the New York session. That for me is a setup on its own to trade down to this pump. That's a separate setup on its own. False break reversal of the high of the week or the low of the week. And but my objective in this video is to give you another example of how to trade the first down day after seeing all of that which I've just explained, and I've explained in my previous video with the pound Aussie. Okay, so when you get that first down day after all those things I've mentioned, you then want to look for some kind of a pump up in New York. I like to trade these in New York, okay? And then you're looking for that move down to the low of the week, which you should get on any of those days once that setup occurs. So we've entered on Thursday, so you could get it on Thursday, but you should get it on the Friday, okay? If it doesn't happen on the Friday, you don't want to hold it over the weekend, you want to close that out, but okay? You're not, this setup is designed to be in and out quick. So you get your target at the low of the week on that Thursday, which is the day you enter, or the next day, Friday. It typically usually happens on the Friday, okay? Friday usually is the day that it'll take out that low of the week. So I hope the video was useful. Watch this video in combination with the last video that I did that spoke about this first down day pattern, and that also spoke about how to trade the low of the week and the high of the week false breakout reversals, okay? I will now talk with you in a future video.